All right, welcome everyone for another weekly commentary from StashAway. I have with me again our Chief Investment Officer, Freddy, freshly off the plane from Malaysia, from the Malaysia office this week. Exactly, so I'm happy that we found the time this week to do this, because I think there's a lot of developments going on. Before we get started on some updates and some news items, I wanted to remind everyone about our StashAway Academy events that are upcoming. Next week, July 3rd, we have an event on July 3rd, 7 p.m. It's about how to plan for your retirement. So we go into strategies for CPF, what SRS could do for your retirement, things like that. You can find out more at stashaway.sg/events for that one. And then a week later, we actually have how to invest the right way with ETFs. So you learn a lot more about ETFs, what they are, how you can use them towards your advantage. That's on July 10th, also 7 p.m. And again, stashaway.sg/events if you want to find out more about those things. That's StashAway Academy. In the meantime, while we be talking, happy for you to leave any comments, questions, whatsoever below here, or you can also, as always, email us at support@stashaway.com. Ready? Lots of things are happening. I think maybe we'll start with maybe some updates to surrounding, Donald Trump is in the air. We should be arriving soon, I think, in Japan, right? G20 is starting. So probably the market's already been very very flattish this week, right? Because they're everyone's just waiting, right? What's going to come out of this? It's been all building up to this now for 6 weeks of chit-chatting against each other. What kind of your expectations? What can you tell maybe our listeners?
Well, I mean, the market's probably used to it by now.
Yeah.
Yet another event, high stake,
yes.
Right? The fact that they agree to meet is a positive, but I think the market is more cautious than ever.
Yes.
Yeah. So there's lots of tweet storm, lots of flip-flops, expected.
Yes.
So I will continue to caution listeners in this channel to not overreact to it. As you have realized by now, market tends to always is volatile.
Yeah.
But you have higher lows, higher lows, higher lows. Since so many Trump events, we've been having higher lows. So the key is to stick to your investment plan, stick to your diversified portfolio, and continue to do what you do. Do not overreact, do not contribute more, do not contribute less, do not overreact to any of these events.
Yeah, I think this is the main message. I know we repeat ourselves quite a bit always, but really this is what makes or breaks your long-term goals, right? Like the ones that you set for yourself. So yeah, thanks for this update, Freddy. We probably have more information on this next week when we speak, right?
Over the weekend, as usual.
Exactly.
Over the Twitter first, not the news flow, but the Twitter.
Exactly, not the news flow. Another thing we discussed a little bit last week, right? There was the central bank updates. Then there was a little bit more again. Beginning of the week, right? Powell said something. It's maybe you can chime in on this a little bit. And again, this is one of Trump's favorite thing to take a swing at right now, right?
Yeah, a couple of weeks ago, the Fed opened a can of worms because that sounded more so-called dovish than what people expected. So even hinting there's room to even start a rate card with 50 basis points rather than 25. But as we develop into this week, it's starting to look unclear again because the fact that the market has moved so much, the bond market has already done the rate cut for the Fed.
Yes.
To the point that
under 2% almost, right?
Oh yes.
Yes. Yeah.
And to the point that the central bankers themselves, not just the US, but even Australia, RBA has been coming out as well.
Yeah.
They are trying to temper those expectations. That's too fast, too furious, too rapid. And it's just a recipe for much more volatility later. So the central bankers are sort of stepping back a little, more measured than before, and hence you see a bit of a reversal in the market. Not surprising.
No, and I think, but then Trump was saying, hey, to Powell, right? He's horrible again, right? Last week.
Yeah, and so he likes Draghi now.
No, he likes Draghi. After last week, he was saying Draghi's bad because he actually was very accommodative in his talks for Europe,
so
right?
Draghi's done a fantastic job on the Euro side, but now if you offer him a citizenship to be American and run the central bank here, then it works for the US dollar. So I think Trump wants him on his team. That's just another
yeah,
gossip
again,
on the
it's a
newspaper.
lot of just talk, right? You
Yes.
can hear a lot of just talk and wanting to do the power play, right? He always says, I can fire him whenever I want. I will never do it, but I could, right? Like he always says it, right?
Right,
Anyway, so
right.
that's I think...
Again, that's entertainment value.
Exactly.
It's just noise. The market is still in the range.
Yeah.
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 We retraced from 2960 level to 2930 now.
Yeah.
It's a small move. Market is always going to, over time, refocus the attention on the economy or forward indicators on the economy. So that's also what StashAway is always focused on.
Yeah. And I think like over the year, I know there might be some more, we had a lot of volatility, but the markets are actually up 14, 15%. Like if you have a very diversified portfolio, you're actually up quite a bit. So it's not bad, right? The news are still so bad. That's what I mean. It's like probably like that is where the upside could come in, right? There's so much doom still, but it's actually the economy is working.
Well, I on this point, I remember December 2017 when we reoptimized tens of thousands of portfolios for clients. We reduced tech stocks and we bought more staples and we bought a lot of gold. And at the time, everybody was saying, wow, market is doing well. Why are you buying more gold? The fact is, you've got to take a long-term view. Right? We systematically invest according to economic numbers and valuations. And that's exactly what StashAway did at the time when gold was $12,048, and now we are 14,000 and above. Yeah. Right? I mean, you can't mix your short-term sort of speculative opinions with your long-term investing plan. Yeah. You've got to really separate the two very, very carefully.
I think gold is a really good example because gold people get emotional about, and a lot of times people don't want it in their portfolio. When good time, like people don't want it in their portfolios because it doesn't pay dividend. They say, right? But it's part of a portfolio that is diversified and efficient. If you
always need a certain amount of gold and bonds, and it creates some portfolio insurance in case something unexpected happened tomorrow. Yeah. And now we have a lot of tweet storms, so the more you have to be ready. So I just, as an example, to just say that look, we have to move beyond the very near-term noises and focus on what really matters, and that's exactly what we're trying to do here. So the naysay, hearsays, tune them out.
Yeah. And lastly, I think let's just touch it quickly before we shut off here today. Singapore, right? Today in the news. And I know that's why I want to bring it up because I don't think it's this big of news, but it will be big news here, right? That Maybank came out and said, hey, there will be a recession in the next quarter, right? Q3 will have a recession in Singapore. What does that actually mean and when they say that, and what is it based on?
Well, my first response when I saw that was, wow, you finally realize it. We have already been in a downward trajectory in Singapore. It's a semiconductor heavy economy, electronics heavy, all the stuff that's a supply chain disruption from the trade war would impact the most. It's always been there. I don't know what's new here. And the market is a forward-looking pricing engine. I don't think it caused any stir in the market. Yeah. It's just a reaffirmation of what's already happened. So let's not overrate it. However, it does highlight the fact that you need to have a global, diversified portfolio. Regardless of where you are, whether you are Singaporean, the home buyers actually don't serve you very well.
It never does.
It never does.
In the world, yeah.
You always need a certain amount of foreign currency, foreign assets, because Singapore, after all, is like many, many other countries, we are small, open economies. Yeah. We import, we export a lot, we trade a lot. We need to have a global portfolio.
Yeah. No, absolutely. I think this is actually nails it right on the head, right? With the portfolio being globally diversified is such an important factor in long-term goal, achieving long-term goals, right? All right, well, Freddy, thank you so much. I know you're off again soon, but we'll be with you again next week. So I hope you will have a good rest of your week. And again, any questions, concerns, whatsoever, support@stashaway.com or just post it down below in the answer box, question and comment box. Thank you so much again, and have a good day.
Ciao.